You sold it for $1 million. Your mortgage right now, or your expenses to pay off are $250,000. You are walking out with $750,000. You have to put the whole thing towards your new investment or investments. (1031) exchange, its applications, its meaning, and how to use it in a practical way. So it's a very interesting topic. It's also a tool that can preserve your wealth. We're going to talk about how, and I'm going to give you some critical information about the deadlines, about just some examples how you can multiply your wealth without paying taxes today. Okay, so first of all, what is 1031? 1031 is the section in the Internal Revenue Code, in a tax code, that allows investors to sell the property and defer their capital gain. You see, in the United States, if you, let's just say, I'm just going to give you an example. You buy a car for $7,000 and you sold it for $9,000, you gain $2,000 in this example. Supposedly that $2,000 has to be reported as capital gain, and you need to pay tax on it, whatever the tax rate may be. So the same thing applies to properties, same things apply to businesses, etc. We are going to focus this conversation mainly on real estate investments. So I just want to make sure that everybody understands, because that's our specialty. And we're about to start to tell you exactly how to use it. Many real estate investors do not realize that when they sell a property, they don't have to pay the tax if they actually use this method, which is called 1031 exchange. When I started this video, I told you, there is capital gain, meaning you're making money on the investments, or money on money. And the way it works, basically, you are telling the government that you are going to sell the property, okay? Sell, let's say, your two-family home, and which was used for investment, and you're going to buy another investment, and that's called in-kind reinvestment. In-kind means if you had real estate, you have to invest back into real estate. Okay, it doesn't have to be the same. It doesn't have to be another two-family home. In my example, you can sell a two-family, buy a commercial property. You can sell a two-family and buy a four-family. And interestingly enough, you can buy several properties. I've seen this done by many of my clients, or at least by some. Okay, but we'll talk about this a little bit later. Let's just stay focused on the topic. So what do? You identify, you have to say, okay, look, you know what, my property is about to be sold, okay, and I'm going to gain X amount of money. For example, I'm going to sell the property for $1 million. There is only $250,000 mortgage left. So I'm just going to, without any expenses, we're just going to not worry about them. Let's say you're going to walk out with $750,000 in this example. You sold it for $1 million. Your mortgage right now, or your expenses to pay off are $250,000. You are walking out with $750,000. You have to put the whole thing towards your new investment or investments. Okay? And this is the only way to take advantage of 1031 exchange. It's not the difference between purchase price and sales price. If you bought it for $600,000 but your mortgage is only $250,000, the whole thing goes into what's called a certain fund, or it's basically an intermediary. It's a company that is authorized to handle those transactions, but we'll talk more about this, in the next few minutes. So you put this money, $750,000, into a certain fund, and now you have to reinvest either a whole thing or a portion. Now, whatever is not reinvested, let's say you only want to reinvest from that $750,000, you only want to reinvest $400,000, then naturally you pay the tax on the difference. So if you don't want to pay tax at all, then you have to reinvest the whole thing. Now we're going to, in the next section, we're going to talk about some critical dates, so please stay tuned. Important timelines. Number one, you have to identify the new property within 45 days. So you sell a house or sell a property, you need to tell this qualified intermediary, it's called the company that's going to hold your funds, you need to identify and tell them, okay, I'm buying 124 Main Street, okay, and 126 Main Street, that's where the money is going to be reinvested. They need to have it. If you didn't do it within 45 days, you now in a violation of a law, and you will not be able to take advantage of this 1031 exchange. But there's good news. So with this 45 days to identify the property, and there is additional 135 days, so the total of 180 days to close the transaction. So you do have 6 months from beginning to end. So 45 days initially to identify the property, and then additional 135 days to close. Okay, and if you're buying more than one, all of them have to close in the same period of time. Let's talk about the qualified intermediary. I promised that I would. So this is just a company that's going to hold your money. They will send you statements, and they will arrange for the transfer of money. You first, when you sell, you first put money with them, and when you need to take the money back within that six months, they will fund the transaction. They will send money directly to now your seller. When you reinvest the money and you buy it from a seller, they will send the money directly to the seller or their agent. So their role is important, and they are on the hook as well to report and say to you, oh, sorry, you didn't make it. We will have to tell the IRS that you did not complete it within 6 months. It's not our fault you didn't make it on time. It is their duty to report all of the transactions, or to be there for you and say, no, everything is okay. They did close it within 6 months. So what are other considerations here? So let's say you want to reinvest and you're buying something more expensive, and whatever you don't, whatever money is coming from the 1031 fund is not enough to buy the new house or new houses. Can you finance the difference? Absolutely you can. We in the mortgage company deal with this all the time. Investors come and say, hey, you know what, I'm doing 1031 exchange. There's $600,000 I would have paid tax on, but I'm reinvesting this money. And by the way, I'm buying a $3 million building. I need financing. I need to finance X amount of dollars for this, in addition to using my 1031 exchange. So you can combine it. You could combine it with the mortgage financing. Okay, and we get involved in this all the time. Please remember, the 1031 exchange, as I said earlier, only from investment to a new investment. You cannot use the proceeds, let's say, from primary residence or from investment to buy a primary residence. It has to be investment to investment. As promised, here are some examples how people, in my opinion, got so successful doing this. I remember a couple, maybe about 7 years ago, and they bought a house about 30 years ago when they were just starting out, 35 maybe even years ago, but by the time they were selling. It was a very long period of time. There was already an elderly couple. They sold it, in the New York area close to Manhattan. They sold it for $2 million. And essentially the whole thing had to go into a 1031 exchange fund because they didn't have any mortgage anymore. 30 years they paid off their mortgage, and now they would have to pay a tax for almost the same thing. They sold it for $2 million or almost $2 million, and they bought it for like 150, 35, 40 years ago. Let's call it 35. I know I went from 30 to 40. Let's call it 35 years ago. So that's how the values elevated in their area. So they would have had to pay the tax almost on $2 million, which is a lot of money. What they did instead, they bought 4 properties, and they used 1031 exchange as a tool. So they kind of diversified, and they bought a mixed-use property, or maybe 2 of them. They bought 2 mixed-use residential properties, and that's what they did. Instead of one piece, somewhere, they had 4 different pieces of real estate, and they didn't pay any tax on the gain. So, and there are countless examples that I actually know in my career. If you have any more questions about this, please comment, share this video with your friends, like it, and please engage. We would love to hear your opinion about the 1031 exchange, and if you think you might ever take advantage of it. God bless you.